Hi, Liesbeth. Hi, everyone.
Hello.
Let's get into the meat of ESG. I think the title of this session is somewhat misleading. I think the end of the industry. I don't think just going by ESG or not going by ESG is going to kill us. But Kelly, maybe if you could just kick off with introduce who you are first of all, and then maybe just do a kind of a brief overview of ESG generally, and then we'll get into the meat of how it affects the gambling sector.
Yes, sure. Thank you so much for having me on the panel today. I'm really excited to be here and be able to share with your audience some of the sort of key topics that are going on in the ESG space. I work for Edison Research Group, based out of London. I head up the ESG franchise for Edison. We're focused on helping companies communicate their ESG strategy effectively with stakeholder groups, specifically investors. I'm ex-London Stock Exchange, and I've been with Edison this year. I'm a pandemic hire. And then in terms of just having a quick overview of ESG, these three letters have been bundled together over the last few years and have come to the surface quite quickly. Obviously, environmental components have driven this for many years. This is not new information. The environmental component and sort of Paris alignment has been around for many, many years, decades even. But actually what we've seen is the social side become a lot more important over the last couple of years due to the pandemic, and we can delve into that a little bit later. But a good governance structure is core to a listed business, and should be at the core of any business looking to get investor engagement. So these three ESGs have been bundled together. Will this label stay? I don't know. But in terms of having good corporate governance, good approach to your social side, and good approach to your environmental commitments is key. And we're here today to talk about what it is investors are looking at, and how companies are responding to the investor inquiries. But also, more importantly, I think it's just what it's doing to this industry. And I kind of agree. I don't think sort of will the industry die. I think that's a little bit dramatic. But yeah, we're definitely here to discuss, what is the changing environment around this space.
Yeah, we'll come to the environmental side later, Liesbeth. But the most important, from it seems to be anyway, but we've had discussion like this before, and the most important factors from ESG that affect gambling sector would arguably be the S and G, which is the social and the governance. Could you explain perhaps some of what investors are looking at in those areas and how that relates to the gambling sector?
I think if we subscribe or describe sustainability in one sentence, it would be how do we minimize our negative impact on society, and then additionally, how do we contribute positively? So when we look at this, it's the creation of a safe user experience in terms of responsible gambling is still like the single most important responsibility for our industry, because having that at the heart and creating like long-term profits while creating that sustainable framework, that's going to be the companies that they're in the long run. But I would see social as being divided in external factors, like they have responsible gaming, responsible marketing, and then there's also the internal topics, which are more related to how you treat your people, the training you give them, the diversity we just spoke about, and other kind of topics.
So the responsible gambling area is clearly what most people would understand as being where a governance or a social aspect hits the industry. And we've got Anna here from Kindred, and Kindred most clearly have gone very public with a zero harm strategy when it comes to gambling. We'll come on to some issues around that, but could you explain maybe the background to that for a start, and explain how the company came up with this as its way of tackling the issue?
Yeah, definitely. I mean, it's as Liesbeth just mentioned, responsible gambling is obviously one of the most material aspects for us as an industry. When we talk about being a sustainable company, we learned years ago that being transparent about our business model, being transparent about our ambitions is really important. Also, when we talk to investors, we need do a lot of education or informing about how we operate. And one of the things we found was that it was really hard for us to be fact-based, which it always makes the dialogue easier, right? So that's why we started looking into this. Some years ago, we set out the ambition. I think it's now 2 or 3 years ago that we set the ambition for 2023. It took us a long time to find the right definition, to make sure it was verified and validated by experts in the field, because we know that to have a constructive dialogue, that's fact-based, that can prove that it's not just greenwashing or talking. So that's how we kind of got to this, and it was through having very direct dialogue with, for example, but also other that we kind of came to that point.
Okay, and you might want to try and sort out something about your microphone, because we can't hear an awful lot this end of what you were saying. Closer. So apologies about that. Kelly, when it comes to the responsible gambling, and as far as investors are concerned, what is it that they're looking at? And an initiative like a zero harm initiative from the likes of Kindred, how does that play out when it comes to how investors view the sector?
Yeah, this is a really important question. Obviously, as we all know, the investor engagement piece with companies is increasingly important to ensure that you stay relevant and that you stay transparent about what you're doing as a business. And the investors are getting increasing pressure from their client base, of their pension funds, the asset owners, and they're also getting directives from policies and regulations that are changing and developing. So really the drive is being pushed through to the investors onto the companies. So what are they looking at? What are the investors looking at? So we've already mentioned the environmental side is probably not the biggest part of the agenda. It certainly shouldn't be ignored, but it's not the biggest agenda. They will look at things like energy management, for example, and total energy consumed, and what percentage of the grid is electricity, and what percentage of the energy is renewable. So they will be looking at environmental, so it's not to be overlooked. But you're absolutely right in thinking about some of the other areas of importance. So that is sort of employee health and safety. They're going to be looking at, for example, this is beyond iGaming, this is into casinos, like a smoke-free environments, etc. Investors will be looking at business ethics on the governance side. So that's going to be sort of companies' internal controls around money laundering, for example, and policies and practices that they've built around this. But the key thing I think we've already touched on here is the consumer welfare, and to see and investors are keen to see the disclosureship around responsible gaming. So looking for disclosures on the facilities and how much of the responsible gaming index is implemented. They'll be looking at things like the alignment with the National Council of Problem Gambling and Internet Responsible Gambling Standards. These are all really important frameworks for companies to be aligned to. So yes, environmental is not the leading and champion sort of the iGaming and gambling space, but it's definitely shouldn't be overlooked, and it's really consumer welfare that disclosureship, transparency, communication, and getting that message across.
Now, Liesbeth, you're obviously part of Aspire Global. Aspire Global has effectively just divested itself of its B2C operations, but it still has obviously a huge B2B business. But we were discussing it just before we came on stage. Clearly, that doesn't mean you then devolve yourselves of responsibility for what happens in terms of potential harm to the consumer. Could you explain how maybe ESG affects B2B companies as much as B2C?
Yes, when you have your own proprietary brands or you are a supplier to operators, you still carry that responsibility, because in the end you deal with the end users maybe one step down the line. And also a B2B platform like Aspire has a lot of managed services, so we deal directly with end users as well. And I don't think there is ever a good reason for not thinking that sustainability doesn't affect your business, because you might be too far away, because that whole value chain and looking into how do you select your suppliers, how do you select your partners, that's very important here. And to connect also to what Kelly said about environment versus social and how is it measured, I think there has been such a large focus on environment globally, not specifically on our industry, because it's so easy to measure. You can measure exactly your CO2, you can see how you can reduce it, you can offset it. There's the laws in place now that demand you to do that by 2050. But when it comes to social, it's much more qualitative. We need to find our own frameworks how to do it. And I admire Kindred for having putting numbers on it in terms of revenue and harmful gambling. I think that's a good step we see ahead. Like, how can we measure and we can show externally that we are improving towards our investors? In the end of the day, investors want to see how we are aware of risks out there and how we are replying and responding to those.
Yeah, it was mentioned on the first panel today about in relation to the SP Tech acquisition by DraftKings, and what has clearly happened there is that there is now a legal action related to information disclosed in that about SP Tech's previous operations or current operations in other territories outside of the US. And I'm interested in whether investors are waking up to, more clearly waking up because of the US, to the situation with regard to regulation and how it affects aspects of ESG, and particularly in terms of social and the governance aspects. Could you maybe go into some of the problems there?
I think over the last decade, sustainability has risen so much, and investors are looking more and more. And indeed, the Hindenburg research related to DraftKings SP Tech takeover, and now the law cases that coming there because they said like there are black operations and they have not been properly involved. So I think this starts from sustainability from the top of your company. What is your vision? What is your mission? You want to focus on regulated market, nearly regulated markets. And if you can be transparent about that in sustainability and annual reporting, that would be a very good point to your investors too. Yes.
Anna, not to bring up a sore point of the Netherlands, but we have to talk about it, I guess. Kindred obviously has made a decision about the Netherlands quite late, in terms of literally waiting for the day of the newly regulated regime to say it was stopping operations. And that clearly hurt the share price, and presumably it would have hurt the investor perception of the company at that point. So what is your response when it comes to issues around regulation? And not to put you on the spot, but what is the company's response in situations like that? What does it say to investors? How can it explain its position when it comes to regulation?
I think, that's been a long journey since 11, 12, 13 years ago, when re-regulation started, and we decided that we wanted to be going towards that kind of a business that goes for local regulations. It's something we've reported continuously for many years as one of our ambitions, to see how much revenue we get from re-regulated markets. It's not been a secret or a surprise about Netherlands. And it's something we talk with investors about very, very openly, I'd say. We saw it in the share price, but also fairly quickly, not recovered entirely, but stabilized. Because we are, I would say, as transparent as we can be, company engaging those dialogues with our shareholders. And just reiterate with the Netherlands again, it's also been a pretty crucial point to say, well, we have a sustainability platform, we have very clear ambitions and targets that are externally audited, but again, it's not just talking the talk, but actually proving where we are, which is also something regulators, similarly to investors, ask us for. Always a key part of the dialogue we have with the stakeholders, the regulators.
Again, I think we're having slight problems with your microphone there, Anna. Kelly, just on the issue of regulation and investors' attitudes towards regulation, or investors' attitudes more to the point to the companies and how they regulate, how they view regulation. Is that changing? Is that something that's now higher up the agenda than it was, partly because maybe of the US, or just generally because of it's now become a much more hotter topic?
I think it's probably a combination of both. I think what we need to, I think it's important to look at, when you're looking at sort of ESG from a global perspective, it's really hard not to separate it out into continents and how different continents are performing either better or are more advanced. If you have a quick look at the US, there's a lot of change happening to sort of the administration. The SEC's climate commitments are evolving and developing. They work on a state-by-state frameworks almost, and so they're ramping up for sure. But it's without doubt that the European market is definitely ahead of the curve with its policies, its regulations, with them shifting from from a disclosureship perspective to a mandatory disclosureship perspective. This is becoming increasingly important, that the mandatory behaviours of the financial market participants means that investors, as well as other sort of financial market participants, definitely need to be changing their mindsets if they're not already. We're seeing a lot of movement in assets under management towards sustainable funds, towards sustainable investing, towards businesses that are demonstrating their sustainability strategy. We're seeing a lot of, there's a lot of evidence that this is the direction of travel for capital markets. Yes, I think it's a mindset shift for sure. I think it's not going to happen overnight. I think we're going to see more and more of the financial markets get on board, if you will. But the direction of travel for capital markets is certainly towards a sustainable future, and that really does impress on companies. And it's definitely, you're absolutely right, Scott, it's driven by sort of regulatory changes that are coming through. And I'm excited to hear what comes out of COP26, something more, hopefully more solid and structured around this as well.
Thank you. Liesbeth, we were talking about investors. Could you explain maybe who we're talking about and what kind of institutions we're talking about here, and what they're invested in, what their goals are when they invest in a company such as Aspire or any of the other listed companies?
Yes, so you have the more institutional investors that are investing in funds, pension funds, and you have the more retail investors. And you see more and more teamed investors as well, especially in the US. You have certain ETFs that look at the whole iGaming industry to invest in a certain portfolio. So there's different kind of investors out there. And it might be that institutional investors are more strict on whether they can invest in companies like gambling, alcohol, tobacco. They have the policies and they might apply negative screening. But there are those institutional investors that really look at your company and see how is their sustainability strategy formed, and if they feel like they are doing the right thing, then they can still invest and they can still decide to keep on investing in you. So this is really interesting. And on top of what we're talking about regulation, I feel social responsibility is something that the company needs to take seriously, because if not, you might put your license in jeopardy, which is not sustainable in the short or the long run. And having compliance at the heart of your company, it makes it easier for you to enter new markets, because the cross-jurisdictional compliance is already integrated in your tech, your organization, and your whole structure. And if you develop that thinking a bit further, if you incorporate a level of DNA, of sustainability DNA, then that's where the real strong performance comes towards financial markets.
I guess one of the reactions to general reactions about the idea of gambling in ESG is that people think, well, we're a sin stock along with tobacco and alcohol, and therefore we don't have to worry about what perceptions of investors in that sense. But that, Kelly, I'm interested maybe in a read across to the tobacco sector, but that presumably sustainability is important to the tobacco sector. It is a sin stock and it causes harm, clearly, but those companies are still listed, they still have investors, they still have to please their investors. Could you explain maybe what seems to be a slight dichotomy, that you have a sin stock, but then you have to worry about ESG as well?
Yeah, I think this is a really good topic, and actually we could probably spend another good hour on this. But just let's try and be punchy. But I think, what Liesbeth was saying earlier around the different types of investors, she was sort of going across the asset classes and passive and active funds. Within the sort of institutional environment, the active funds, you've then also got another scale of investors, and that's across sort of the traditional investor community, who are looking at traditional active investing, right? So they're only going to focus on financial metrics and they're going to be looking for financial return only. Those businesses still exist and will continue to exist for the short term, for sure. But then you'll go through the sort of responsible and ethical investing, which, to your point, is around screening. So these active investors are going to be adopting their own methodologies on how to look at companies and what they should be including in their portfolios. And those sort of responsible ethical investors are looking at negative screening, for example. They are looking at tobacco, they are looking at gambling and oil and gas and potentially ruling them out. But that doesn't mean that a company can't do the right approaches to their sustainability strategy to still be considered from the responsible ethical investing community of investors. And as you go along the scale of investors, like the ESG investing and integration, they are still looking at competitive financial return. There's no getting away from it, as well as sustainability, the same as responsible and ethical investors. But it's when you get to the other end of the scale, where you're looking at maybe more impact-only investors and philanthropy. That's, you know, this industry, this sin stock industry, will be screened out for sure. But you know, I think this goes back to the title of this actual panel today. If there is still investment to be made, whether it's on sort of a traditional level and still looking for competitive financial returns, but if you want to be considered more for sort of the responsible investing space, it's about disclosure, it's about communication, and it's about being transparent. So tobacco's not going away, alcohol's not going away, gambling's not going away, and if it does, it's going to go underground and it becomes a bigger problem. So actually what it's about is addressing the sustainability issues and how you run your business, and how you're, and particularly the consumer welfare in this particular space. Yeah.
And I suppose one of the things that people sometimes forget, and we've discussed this previously on the panel, is that ESG doesn't just speak outwardly; it also speaks inwardly. That there's an aspect of this is talking to people within companies about how they grow and how they are going to grow and how they're going to treat people who work for them. Liesbeth, how to what extent is that now becoming a driver as well when it comes to how companies view ESG as an internal thing, not just an external?
Very important. I think, the previous panel, if you were here, that is about diversity. That is ESG as well. If your company focuses on sustainability and puts it in their mission and their whole strategy, that's a reason for having that competitive advantage on the recruitment market, because it's more likely than not, if you want to get the top performers out there, that they do care about your attitude towards your customers, but also towards society, and they have choice. So it's very important at the moment.
Anna, do you think that your kind of the zero harm idea is as much aimed at your own internal audience, that you're trying to tell people, you're explaining to people within the company about the importance of moves that you make?
Yeah, absolutely. I'm trying with a headset now. I hope that's
great.
That's better.
That's much better. Thank you.
Okay, good. No, absolutely. It's what we've seen is once we actually set this ambition and we set some very clear numbers behind it, we got huge engagement, not just externally but also internally. It's much easier for people to understand and to get behind then that we have a shared ambition here across teams, across markets. So we're looking now actually to see if we can expand a little bit and have set some more of these very tangible ambitions across our sustainability framework, because it is definitely internally and externally, it really drives engagement and makes it much easier to get involved.
That's great.
In that ambition.
How do you kind of advertise that fact internally? What is it that you do to ensure that people understand what you're doing and what the aims are, and what is the communication on that?
So we obviously have internal communications in our company updates, in our newsletters, in our shared intranet. But what we've also done is to actually start saying, well, all employees were on a bonus plan. Part of that bonus plan is measured on our sustainability efforts. So we have a sustainability index that is built for employee bonus plans. makes it much easier again for employees to see how they contribute to our overall sustainability framework and progress. So we try to have different elements to kind of support employees in seeing how they can contribute to our framework. And then that's very high level. We have lower level as well, which is much more around community engagement. How can we support our communities? Employees have some days they can take off every year and very actively go and contribute with their resource and knowledge. So there are different aspects to this where we try to have employee engagement.
Yes, I totally agree, and I think it starts from the moment where you recruit the person. Is your HR asking a sustainability question in there, and it comes down again to what people you want to work for you. Do you want people that squeeze the customer as quickly as possible, or really think along how can we operate in a way that we have sustainable players for a long term and not just a short term. We want to retain them, and I think this is sustainable business operations and the mindset that you want your employees to carry. And it's also an important part at the induction of your company to explain like what are we doing, and continuously keep them updated with different kind of training and management meetings. Be involved, very involved in. I think our jobs as sustainability managers is a lot about communication.
This is, I guess, this what we're talking about when you look at an annual report from a listed company. This is kind of a huge, thick section which deals with issues around pay and remuneration for directors and the rest. Kelly, these are really important subjects. This is probably the governance aspect, but it is really important, isn't it, that companies, that the pay structure is right, that the bonus structure is right. This is where companies actually have got, particularly in the UK listed sector, companies have got caught out previously.
Yeah, look, I think the sort of governance structure is really key. I think. We mentioned sort of around sort of business ethics before, and sort of companies' internal controls around that, including sort of the policies and practices they've been putting around sort of money laundering and stuff. I think all of this is really key, but actually you focused on a point in your question around how to get that message across, and this can come across in the annual report, but what you don't want it to do is get lost in the annual report. The annual reports can be quite lengthy. The sustainability reports can be quite lengthy. So actually, it's that materiality, it's that those governance materialities that need to come to the surface. So just making sure that businesses are aware of what is materially relevant, aware of what metrics need to be disclosed on, and bringing that to the surface. And that can be it can be through the annual report, but you don't want to get in lost. It can be through sustainability reports, but again, it could be lost because a lot of sustainability reports are huge now. So, the key message here is making sure materiality around governance, around other components of the pillars, the E and the S, is really at the surface. So maybe building your own ESG report and communicating that effectively. You really, we're trying to get the message across. We're trying to help that stakeholder group understand your business better, understand your sustainability strategy better, and you need to be able to control the narrative as a business. So, I think there's probably some frustrations around rating agencies that don't allow companies to control the narrative of the sustainability strategy, but it's really key that materiality, narrative control, and transparency and communication comes across effectively, and that does include the governance side as well. That is relevant to this sector.
Kelly, how do you? We're getting close towards the end. How would you sum up where we're going to be heading with this? What can you envisage in terms of what companies will be having to think about in the next 5 years, for instance, as listed entities?
My crystal ball. So, and if I know that, I'd probably be very rich. But I think
we assumed you're very rich already, to be honest with you, Kelly. But
if only. It's Kelly Perry, not Katy Perry, just to be clear. Don't have her fun. Anyway, so the point is, I think, capital markets is developing. What we're seeing is the growth in AUMs. We're seeing that continue. The expectations of AUMs in assets around ESG are growing. We identified something that 80% of investors now are integrating ESG considerations into their portfolio decision making. We're seeing the development of the broader stakeholder group, stakeholder capitalism is growing and it's important. That includes the employees. We've seen many different movements across the globe over the last 2, 3, 4 years. So it's recognising the development and shift towards people, planet, and having an importance in that. So the direction of travel from a capital markets perspective is growing AUMs and growing stakeholder capitalism. And I think now's the time. So now's the time to start looking at what you're doing. If you're not addressing a sustainability strategy, now's the time, because I think Anna and Liesbeth can attest to this doesn't happen overnight. It doesn't take 6 months to build a sort of sustainability strategy, implement it into the operations of the business and disclose on that. This is years of work, detailed work, lengthy work, frameworks, questionnaires, etc., and so on. So choose a lane, stick in it, and start heading in the right direction towards sustainability.
That's great. Anna, if in that sense of sticking in your lane, what's the biggest problems? What are the things that you can foresee as endangering the attempts from Kindred? What are the things that you have in your risks? Your kind of risk looking forward at what risks are coming up.
One of the things we talk a lot about now, and we touched upon it in this panel as well, is very much around the industry perception, and we talk about thin stocks and kind of where we're heading with that. And I think with regulations we've seen, it's just impacted the perception of the industry to an extreme we probably didn't see coming 10 years ago. So that's something we're working a lot on, is just to what Kelly just said now, how can we communicate very clearly how we operate and be transparent about our business model, and to what Liesbeth said, that we're here for the long run. We're not here to extract value very short term, and how do we propose we can build an industry that is sustainable in the long run and is still here in 10, 20, 30 years.
Yeah.
Yeah.
And Liesbeth, a final word from you. I mean, you're in a company, you're in a sector which changes a lot. Your company is part of that. It's changed. Things change happens. How do you respond to that? And what do you think in terms of what the area that you control? How much is that going to grow, do you think, in the next few years?
Yes, it's setting goals, targets, KPIs on those goals and targets, and then it's about small incremental steps, but in the end you make a large progress. And once your company is having that in its mission and is headed towards that, it needs to be carried from the top. It's not just me doing this job. It's the board. We have a sustainability committee. It's really the top of the company wants to be a sustainable company, and we're working towards that. And this is a great challenge for me. And I think overall we want to work together as an industry, speak more with a common voice, address all the materiality topics more powerful. And here we can improve as well. But I'm really happy to meet all the sustainability colleagues and get the discussion going and see how we can step it up.
Thanks very much for everyone. Kelly, I'll see you in a couple of weeks at the Reputation Matters event in London. Hopefully we'll see you in person. Anna, thank you very much for your time, and thank you for sorting out your microphone at some point. And Liesbeth, thank you very much. That's great. Thank you, everyone.
Thank you. Bye.
Thanks, everyone. Thank you.